Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our Oil and Gas Conference. Our next live presentation is from AXP Energy. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Dan Lansky, Managing Director, CEO, of AXP Energy, which trades on the OTC markets under the symbol AUNXF and on the ASX under the symbol AXP. Welcome, Dan.
Yes, thanks, Greg. Great to be here, and welcome everybody, and thank you for joining us. So it's pretty exciting to be able to introduce this AXP Energy story to you today. We're a small company. We're just getting started with a new tangent in our business in the USA. We operate out of Colorado. As Greg said, we're listed on both the ASX and the OTC markets. So I'll just introduce quickly the board that we have behind us. You'll see that we're a very small company, a market cap of only 13 million Australian dollars, which is about 10 million US dollars. Our board consists of a diverse group of people. Sam Jarvis, our chairman, is an oil and gas engineer. He's done a lot of offshore drilling and onshore operations as well, and has a commercial management background with managing offshore drilling platforms on a large scale. James Dack recently joined the board. He's a non-executive director. He has a long history in commercial investment and real estate in Australia. And Stuart Middleton is an engineer with a master's degree in finance and has worked in upstream oil and gas as well as mining operations across China, Southeast Asia, Australia, and the USA. So it's a small team. As you can see, we have a lot of shares on issue at the moment. This is an opportunity to build the company from a base, and we're pursuing a new theme now. As from oil and gas, we're moving into doing electricity and driving Bitcoin miners using our stranded natural gas in Colorado. At the moment, very topical about the access to the electricity grid, not only in the US and Canada, but around the world for data centers, as the need for electricity is doubling quite quickly, and the grid is struggling to keep up with demand. So one of the things that's happening, and is, as I said, very topical across the markets, is that we're seeing off-grid power now being used from natural gas sources and others to drive different kinds of data centers. What we're seeing is AXP has recently completed a trial in Colorado on our asset, where we have been powering a number of Bitcoin operations with the backing of NASDAQ listed BitFuFu. We're currently in the process of planning and growing, targeting 25 megawatts of electricity by the end of December this year. And we're also looking for December 2026, growing through to 100 megawatts with the assistance of BitFuFu. One of the things that's coming from this, we not only have oil production now, which we were unable to do as our gas was stranded, we cannot flare and we cannot vent in Colorado. So by using the gas to power the generators to create electricity, which run the crypto miners, we've recommenced oil production from a number of wells, and we also have a secondary revenue stream from producing the electricity and sharing revenue with the crypto mining operation. So we're in an interesting position in southern Colorado, near Colorado Springs. We've got 750 billion cubic feet of contingent reserves, a number of producing wells. We've got 1,200 acres held by production and access to 10,000 acres at the moment. Where we are in Colorado is part of the old Florence oil field, and we have 3 stacked pay zones there: the Pierre Formation, the Niobrara Shale, and the Greenhorn Formation. So one of the things that's happening from recommencing oil production is that our contingent resource sitting there at 750 BCF plus oil, now we should be able to turn some of that into our proved developed producing and proved undeveloped locations in our upcoming reserve update, which will happen in our June quarter. So it's an interesting time. As you can see, in 2020, we were able to flare gas and this field was producing. The rules changed and there was no more flaring and no more venting. So now we've been able to recommence oil production, push our gas to the generators, which are operating the crypto mining equipment. During calendar year 2024, we established pipelines back to a central location at Pathfinder to kick off the trial, which only began in January. We've now been running since the end of January through February and through March. We're running 2 containers at the moment with only 550 ASIC miners. However, the use of gas to produce that 1.5 megawatts is between 220 MCF a day and 250 MCF a day. So with our large contingent resource here at Colorado, we've got a great opportunity to continue to grow the business and bring additional wells online over time to make sure that we're able to scale quickly and assist BitFu with their goal of 25 megawatts by Christmas this year. So what's happening is pretty exciting out there at the moment. We've got additional sites that we're now moving generators onto. You'll notice from the aerial shot there, we have plenty of area to put on generators, additional containers. And as we roll out and we're getting more efficient with our deployment of the crypto miners, we're expecting to see a 40% increase in our hash rates in the next deployment of additional ASIC miners to site. Permitting's underway. We're planning to have the second site up and running within the June quarter. Additional generators are also going on the Pathfinder, the initial site. And as I said, our target is for 25 megawatts by the end of this calendar year. We've got 24 wells existing on the location. Our plans are to deepen existing wells that are in the Pierre formation, chasing the Niobrara and the deeper Greenhorn. One of the things that's happening in the next few weeks is the first well completed in the Greenhorn will come online for production, and that will add additional oil and gas for us. Depending on the success of that completion in the Greenhorn formation, it opens up a whole new reservoir that is not currently included in our resource. So again, we've got 750 BCF of gas out here and about 80 million barrels of oil sitting in our contingent resource. As we bring these online, that will move further and closer into proven developed producing and proven undeveloped reserves, driving the value of the company higher. So it's a simple story. I'm not going to get into forward-looking projections about what can happen. We're running currently 1.5 megawatt. We're about to go to 7 megawatt plus in the June quarter with a target of 25 megawatts by December 2025. And working with the backing of BitFuFu, we're looking to take that through to 100 megawatts off-grid calendar 2026. So it's a short presentation today, which will open up for some question and answers. Just to wrap up, we've got a unique position where we've got stranded gas sitting in Colorado. We're looking at other assets in North America. Canada is very promising, in Alberta and Saskatchewan. There's a lot of stranded gas up there. Other states in the US are open for exploitation. We've got a pipeline ahead of us heading towards 25 megawatts an hour by the end of the calendar year, as I've said. Looking at potential acquisitions, we've teamed up with NASDAQ-listed BitFuFu, who just had a ripper of a year. They've announced their revenue growth was up over 60%. They're now around $1 billion market cap at the current time, even with the fluctuations of the Bitcoin price. We're in a remote area. We've got local government support. Florence is the second oldest oil field in the USA, and it was actually before Spindletop came online that they were producing oil in Florence. There's a lot of oil still in the ground. We've got 3 stack formation. It's going to be an interesting time to develop this out. We've got a new president. We'll see how that pans out in the drill bit. Capital available, multiple revenue streams. We've got gas and power. Because we're able to push the gas to the generators, we've got additional revenue from increased oil production. We're stripping NGLs on site, and we also get performance bonuses for uptime with our crypto mining data centers. The original trial we did in February, we were running at 83, 84%. At the end of February, we were able to tune better with our pools and how we sell the data, and we were running at 93 to 94% by early March, which was a real achievement for the team, as this is the first time our oil and gas crew have worked closely with the technical team who are running the crypto miners. We've got a large resource, multiple stack pays, untapped out here. We've never been able to monetize the gas as we're stranded. We have no access to a gas sales line. We're looking at additional assets in other states and jurisdictions that are friendly to the oil and gas business, as well as incentives to bring the data center model out to the oil field, to the wellhead. So again, thank you for listening in today. It's been a pretty exciting journey. I joined the company 90 days ago to take control and drive this growth over the next 12 months, and we'll open up for questions. Thank you. Okay, looking here at the background, we've got a question about the share structure. Currently, 65% of the company is owned by the top 20 shareholders. We have a number of large family offices out of Australia sit in that top 20, as well as the board of directors. There is also a portion of shares trading on the OTC markets, which make up about 15% of the total capital on issue. Yes, we are. There's a question about agreements to finance development and production. We are looking at off-balance sheet opportunities. We have teamed up with a large NASDAQ-listed company. They're very keen to scale the operation. We are in early discussions about how we might engage that process from a financial point of view, as well as when it comes to the generators and the electricity side of things. We're talking to suppliers and financiers about rent-to-buy schemes that allow us to service our generators as we scale up from our cash flow, rather than having to raise a large amount of equity in a small company. Major milestones and capital needs for 2025 is another question. In 2025, as we go through to 25 megawatts, is the goal by December year end. We will be rolling out, obviously, 25 megawatts of generators. Currently 1.5 megawatts, I'll give you some idea, 1.5 megawatts using 220 MCF of gas a day is capable of producing 1 Bitcoin per month, calendar month. At 25 megawatts, it should be able to produce more than 16 Bitcoin per month. And therefore, there's a significant cash flow raised from there. As we grow, we should be able to cash flow certain growth over the second half of the year. And also, we're looking at creative finance packaging rather than equity. If there's any other questions, there we go. Still some more coming in. Questions about Colorado and the state and local government. It's a pretty robust regulatory environment in Colorado. I've previously operated in Oklahoma, Texas, and Kansas for the last 20 years as an operating company, either managing director, CEO, or chairman. And it's certainly been an interesting process getting permits in Colorado. There is a regime there. We do run a process. To deepen wells takes 60 days to get a permit, and drilling new wells is a longer process. So this is one of the reasons why in parallel we're looking at additional assets outside of Colorado. The permitting process in Texas and Oklahoma and places in Alberta, Saskatchewan are a lot friendlier. So whilst we have a huge asset here and a huge resource, it will take time to develop. To facilitate faster growth, we are looking at other acquisitions with existing production, but with infill drilling opportunities. Okay, well, I'll wrap it up there. Thanks again for giving us the opportunity to share with you about AXP Energy. As I said, we trade on the ASX and as well as on the OTC markets. Thank you.